Let's talk to Wilson Leung. He is the Chief Market Strategist for TrendsetterFX. Very good morning to you, Wilson.
Good morning, Nick.
Okay, you've sent two slides through. Let's get on with them without further ado. The first one, we got the dollar yen, a daily chart. What are your observations?
Well, we have been seeing a lot of active safe haven yen buying last week on risk aversion against the greenback, the euro, and sterling. Against the dollar because of the falling US yields from its 7-year high due to the sell-off in the Dow and S&P 500. Against the euro because of the Italian budget deficit concerns, and then sterling. No price for guessing what causes that. So it looks very interesting to me, Nick, that we have seen the dollar yen from a daily chart haven't risen from April's, which is the low for the year. It was a 16-month low all the way to 114.55 in early October. But then we saw pretty strong resistance and selling out there, and we saw the dollar yen coming off because of the falling dollar US yields to 111.84 last Thursday, and then we have just briefly broken below this support today in Europe. So that looks to me that the entire up move from 104.57 has at least made a temporary top. And then I've shown the Fibonacci retracements on the chart, Nick, and looks like that we are going to see the dollar yen at least heading back to 110.80. So my recommendation is to sell the dollar yen this week when we see a bounce back to say choose a level. I think 112.40.50 would be a good selling level on the dollar yen, and target, as I said, 110.80. And stop loss, I would place it at 113. If we close above 113, then my bearish scenario would be put in the bin and move back to 114. So that's the outlook for the dollar yen in the next few days, Nick.
Okay, let's move on then to the weekly chart. How does this look big picture wise?
Boring. So you can see on the weekly chart, it has been moving basically on a huge sideways pattern for almost 2 years. So if I say anything more than that, it was just pure just imagination. But you can see that the dollar rose from 99 even, which was a 2016 bottom, all the way to 118.66, and then just swung sideways. But having said that, because of the risk aversion, the activities that I just mentioned, I would see the dollar yen coming back to 110. But then the key level to watch would be the 108.12. That's just below the dynamic 61.8 Fibonacci retracement of the entire rise from 104.57 to 114.55. Longer term, I think that buying a dollar yen on dips is still okay if the Fed continues with its rate hikes next year. But for now, I'll be a dollar bear, selling the dollar for a pullback. If we break above 114.74 resistance, then we will see a move to a 117, 118. So that's my medium-term take on the dollar yen, Nick.
Understood. Wilson, thank you very much indeed for your time.
Pleasure.